Okay, dear students, let's start the second lecture on relevant costing and test your understanding for, let's start from the homework. This is your homework, but I really want every one of you do attempt this test your understanding for. In the next class, I will share the answer of this test your understanding for. Now let's go ahead. A very important decision we are starting now. Make or buy decision. Make or buy. Right now, we are just focusing on financial factors and then we'll be discussing the non-financial areas as well. Basically, when it comes to make or buy decision, you have to just consider what is your relevant cost of, let's say, making something, and you can get the same thing from outside for how much. For example, if you're making within the organization and let's say the internal cost is $4 per unit, assuming you're making something within the organization and let's say cost is variable cost per unit, relevant cost per unit is $4. And if you're buying the same thing from outside and let's say it will cost you $5 per unit, then straightforward, I will reject, I will not buy it from outside. Because if we can produce it the same thing for $4, then why would I pay $5? But if your internal costs of manufacturing a unit is, let's say, $6, and same thing, without compromising on quality, you can get it from outside for, let's say, $5.2, then I'll buy it from outside. So simply make or buy decision. You have to just compare what is your cost of producing the same thing internally and what is the price you can get the same thing from outside. Obviously, whichever is cheaper for you, you will go for that. So businesses may face with the decision whether to make components for their own products themselves or to concentrate their resources on assembling the products, obtaining the component from outside suppliers instead of making them in-house. If the resources are bought in, their purchase cost is wholly marginal, direct. However, if it is decides to manufacture the component internally, the comparative cost of doing will be the direct material, wages cost plus the variable overhead. So if the total variable cost of internally manufactured component is seen to be greater, then the cost of obtaining a similar component elsewhere, it is obviously uneconomic to produce these items internally, obviously. There are two types of make versus buy decision. Make versus buy decision with no limiting factor, and the second is with a limiting factor. Let us first discuss without a limiting factor. Make or buy decisions with no limiting factors. In a make or buy decision with no limiting factors, the relevant costs are the differential cost between the two options, make versus buy. Determine the cost means decide the cost effectiveness of outsourcing means get it done the same job from someone else. The accounting activities and identify the qualitative factors involved as well. Fine. The first requirement is determine means decide the cost effectiveness. Which one is cost effective? Outsourcing or doing the same thing at home internally? Plus, you need to identify the quantitative factors involved. Let's see. Qualitative factors involved. KRS companies considering whether to administer its own purchase ledger or to use an external accounting service. It has obtained the following estimate for each option. Internal service department. Purchase hardware software will cost you $320 per annum. Hardware, software maintenance 750. Volume is not applicable. Accounting is stationary 500 per annum. Part-time accountant, you have to hire clerk 6,000. So simply, this total of this will give you the relevant cost of internal service department. So 320 plus 750 plus 500 plus 6,000. I'm getting a 7570. So simply internal processing relevant cost is 7,570. Okay. External services. Processing of invoices, credit notes. If you want them to process the invoices, credit notes, they will charge you $0.50 per document. And the volume is 5,000 per annum. It means if I multiply this with 0.5, so processing of invoices and slash credit notes will cost us $2,500. Processing of check payment 0.50 per check, they are 4,000 into 0.5. I'm getting 2,000. Reconciling suppliers account $2 per supplier per month, they are 150. Multiply by 2. This 2 multiply by 12 because 150 is per month and we are working for the whole year. I'm getting 3,600. So reconciling suppliers accounts will cost us 3,600. So 2,500 plus 2,000 plus 3,600. The relevant cost of outsourcing is 8,100. So obviously, we should not outsource accounting activities because outsourcing is costly than doing the same job internally. So simply it would not be cost effective to outsource. So simply not to outsource, not to outsource. So simply not to outsource your accounting activities, not to outsource the accounting activities. Now they are saying also identify the qualitative factors. When it comes to the qualitative factors, right now look at this, the volume is 5,000 and 4,000. It means if volume increases, then outsourcing becomes more expensive. Qualitative factors, one is increase in volume. Increase in volume. Increase in volume will make outsourcing more expensive. Outsourcing more expensive. Then obviously quality of work. You cannot ignore this. Quality of work and the security of information, confidentiality of information. What is the guarantee that information will be secure? Security of information. So what are the qualitative factors which you should consider? That is, if the volume increases, then obviously outsourcing will become more expensive. And what quality of supply will be there? So there's a possibility that outsourcing, that firm I'm going to outsource my accounting work, they might be doing more errors. And what is the security of information? Now let's go for make or buy decision with a limiting factor. This is important. With the limiting factor, we know that limiting factor is the factor which actually restricts your operating activity level, which restricts your operations. In the presence of a limiting factor, the following step-by-step approach could be adopted with a make versus buy question. And these 5 steps are extremely important. And if you can understand these 5 steps, then you can do each and every question on this topic easily. Basically, these 5 steps will give you the approach. Number 1 is saving per unit of each product is calculated. How to calculate the saving? Purchases price minus the variable cost to make it. So first of all, you have to calculate the saving per unit. Normally, when you make something, it will be cheaper than buying it from outside. It's a normal thing. Obviously, if you are making something expensive, then you can get it from outside. So you will get it from outside. So, but normally, I would say that organization, they will be making the same thing cheaper than they get it from outside. Step 1, to calculate the saving per unit of each product is calculated. How will you calculate the saving? Purchases price minus variable cost to make. Second, divide this by the amount of scarce resources means limiting factor. This gives the saving per unit of limiting factor. Fine. Rank the products. The product which is having the highest saving per limiting factor, that will be manufactured first. The higher the saving per limiting factor, the greater the priority to make that should be given to the product. Once the priorities have been decided, the scarce resources is allocated to the products in order of the priorities until it is fully used up. Any products with unsatisfied demand can be satisfied by buying from external source. Obviously, if any product is still having unsatisfied demand, unfulfilled demand, then you have to buy from external source. Let's see. This question will give you a really good understanding how to deal with a make or buy decision within the limiting factor. What number of units should be purchased from the outsourced supplier? What number of units should be purchased from the outside supplier? Let's read. A company manufactures 4 components. A company manufactures 4 components L, M, N, and P, which are incorporated into different products. All the components are manufactured using the same general purpose machinery. The following production cost and the machinery hour data are available, together with the purchase prices from an outside supplier. Production cost, direct material, obviously relevant, direct labor relevant, variable overhead is relevant. Purchase from outside, purchase price from outside. Supplier is asking 57, 55. Okay. Machine hours. L takes 3 hours. M, 1 unit of L takes 3 machine hours. M takes 5. N takes 4. And P takes 6. Manufacturing requirement shows a need of 1500 units of each component per week. So the demand of each component is 1500 units per week. The maximum number of general purpose machine hours are available is 2000 or 24,000. Nothing is mentioned, then obviously given fixed cost is your existing fixed cost, and that is irrelevant. That is irrelevant. Now, step 1, we need to calculate saving per unit. Let's do that. So test your understanding 6. Let's simply calculate saving per unit. How will you calculate? Let's see the products. L, M, N, and P. Purchase price. External purchase price they have given us. External purchase price. 57, 55, 54, and 50. 57, 55, 54, and 50. Now let's see variable cost to make. Variable cost to make. $12 plus 25 plus 8. 12 plus 25 plus 8, I'm getting 45. 18 plus 15 plus 7. So 15 plus 7, 22 plus 18, 40. 15, 10, 5, 30. 8, 8, 4, 20. So here comes the variable cost to make. 45, 40, 30, 20. 30, 20, 40, 45. So very easily, we know what is the saving per unit. Obviously, making internally is cheaper than buying from outside. So saving per component per unit of the product is 12 here. 55 minus 40, 15, 54 minus 30, 24, and 30. Now we need to calculate saving per unit of the limiting factor. Saving, step 2. In step 2, we just need to calculate saving per unit of the limiting factor. Saving per unit of the limiting factor. Limiting factor. Now come here. L needs 3 machine hours. 1500 into 3. M needs 15 multiplied by 5. 15 multiplied by 4. 15 multiplied by 6. So total machine hours, they are required, there are 27, available are 24. It means obviously machine is the limiting factor. Machine time is the limiting factor. So L needs 1 unit of L needs 3 hours. M needs 5, 4, and 6. Limiting factor is machine hours. Now simply divide saving by the limiting factor. 1 unit of L needs 3 machine hours. So now we are dividing saving per unit with a limiting factor to get saving per unit of the limiting factor. Saving per unit per limiting factor. 12 divided by 3, I'm getting 4. 15 divided by 5, I'm getting 3. 24 divided by 4, I'm getting 6. 30 divided by 6, I'm getting 5. So saving per unit per limiting factor, the one which has a highest saving, it's going to be number 1. Ranking. Let me change the color. So that's first. N is first, P is going to be second, L is going to be third and fourth. Now we need to allocate the resources. Obviously, according to the ranking order, allocate the limiting resources. Allocate scarce resources of 24,000 machine hours of products. So it has to be N, P, L, and M. Let's see. Okay. Demand. Machine hours required. Demand is 1500. Okay. Into N needs how many hours? N needs 4 hours. So that is 6000 hours. P. How many hours P needs? P needs 6 hours. 9000. So 6 plus 9, 15. L. L needs 3 hours. Now, actually available hours. We have 24,000 hours. How much we have used? We have used 6,000 plus 9,000 plus 4,500. So we have utilized basically 19,500 hours. Now, how many units of M we will be producing? For that, we need to see how many hours we have. Out of 24,000, we have utilized 19,500. So 24,000 minus 19,500, the balancing figure is 4,500 hours. 24,000 minus 19,500, the balancing figure, the remaining hours left, they are 4,500. Now, how many units we can manufacture for product M? So simply 4,500 divided by 1 unit of M needs how many machine hours? 1 unit of M needs how many machine hours? Let's see. It needs 5. So simply 4,500 divided by 5. Let me use the calculator. 4,500 divided by 5. So only 900 units of M can be manufactured. Only 900 units of M can be manufactured. Okay. Now, still demand of M is there, but we can just manufacture 900. It means that if I show you the unsatisfied demand, unsatisfied demand of M is 600 units. How did I get 1500? Is the demand 900? We are making it. So still 600 is demand is unsatisfied. So basically now we have to bought these 600 externally so that we can fulfill the demand of M. So unsatisfied demand of M is 600 units. So unsatisfied demand of M is 600 units, and these will have to be bought externally. These will have to be bought externally. Now, when you're going to buy, logically, you should buy the product externally, which is cheaper for you to buy from external. Repeat. Obviously, we have decided to buy, but the concept is you need to check. Logically, that product should be bought first externally, which is cheaper out of all the products. Let's see. The products are L, M, N, and P. Variable cost to make, we know that. Variable cost to make. We have already calculated 45, 40, 30, and 20. External cost, we know that. L you can get it for 57, M 55, 54, and 50. It can be seen that every product should be manufactured internally, that is cheaper. So how much additional cost you have to pay if you are going to buy it external? So incremental cost. If you buy incremental cost, if you buy from outside, you will have L. You have to pay $12 extra. Here you have to pay 15. Here you have to pay 24 extra. Here you have to pay 30 extra. Now let's see hours per unit. Hours per unit. We need 3 hours, 5, 4, and 6. Let's see the incremental cost per hour. Incremental cost per hour. 4, 3, 6, and 5. Now ranking will be on the basis of cheapest per hour. Cheapest per hour. First of all, you should buy externally M, then go for L, then go for P, and finally you go for N. So where you are having incremental cost per hour lowest, that is the cheapest per hour, that is the cheapest per limiting factor. So always start buying from the product which is cheapest per limiting factor, and that is M. Now we have already basically calculated that required hours are 27,000. Required hours. 1500 into 3 plus 1500 into 5 plus 1500 into 4 and 1500 into 6. We need 27,000 hours, but available is 24. Available 24. So the shortfall is 3,000 hours. Shortfall 3,000 hours. So it means that we have to buy externally. Cheapest component must be bought externally. So simply cheapest component per hour should be buy externally. Cheapest component per hour must be bought externally. Must be bought externally. So we need 3,000 more hours to produce M. 3,000 hours, 1 unit of M needs 5 hours. So basically 600 units of M should be bought externally. 600 units of M should be bought externally. So students, what else? Now come here. Make versus buy other issues to consider. In addition to the relative cost of buying externally compared to making in-house, management must consider a number of other issues before a final decision is made. Reliability of external supplier, very important. Can the outside company be relied upon to meet the requirement in terms of quantity required, quality required, delivery on time, price stability? Specialist skills. The external supplier may possess some specialist skills that are not available in-house. Alternative use of resource. Outsourcing will free up resources which may be used to in another part of the business. Social. Will outsourcing result in a reduction of the workforce? Redundancy cost, should it be considered? Legal. Will outsourcing affect contractual obligation with the supplier employees? Confidential. Confidentiality. Is there a risk of loss of confidentiality, especially if external supplier performs similar work for rival companies? Customer reaction to, do customers attach importance to the products being made in-house? Advantages, disadvantages of outsourcing. Advantages: greater flexibility, lower investment risk, improve cash flows, concentrates on core. You can concentrate on your core competence. Normally, non-core issues we outsource, non-core activities we outsource. Enables more advanced technology to be used without making investment. Disadvantages: possibility of choosing a wrong supplier, loss of visibility and control over the process, possibility of increased lead time. So students, these make versus buy other issues are extremely important. So do try to obviously read it again and try to memorize some of them. Inshallah, in the next class, we'll be discussing more on this relevant costing. So thank you very much for watching this lecture, and please don't forget to attempt the homework. Thank you.